G'day guys, welcome to an episode of the Pumped on Property Show. Now we're going to keep this one really short and sweet today, but there's so much good information that Simon and I have been reading in the last couple of months that we thought we wanted to bring some of that to you over the next 10 minutes or so that you have a little bit more confidence moving through the next few years, because there is an election. We're hearing about interest rates at the moment. Obviously there's the stuff going on in Europe. We've had fires, we've had floods, we've had COVID. There's just a lot going on that's spooking people, and because of that, some of the confidence has been kicked out of the market recently. And we just wanted to remind everyone that Australia isn't Sydney and Melbourne, that there is a whole bunch of different stuff going on, and even Brisbane or Perth isn't one market. There's hundreds of suburbs within that market. And so as we look forward over the next 5-6 years and then into the next 20 years, that's how you set yourselves up for financial freedom, not what is happening in the news cycle every single week and how that's short-term affecting stock prices or property prices over a month.
Well, they're always going to be there, right? There's always going to be some narrative, some negative narrative out there in the world that is going to scare us a little bit. And I've felt it over the last couple of years at different points. It's something that's come up and I've been like, a little bit spooked. But we try and just let's get a little bit more context to this situation, and rather than just retreating and believing everything at their word, we just look back in history. And the best thing about living in 22 is we've got years and years and years, decades of history. We've got decades of data recording, and we can use that to our advantage, because whilst nobody can predict the future, the past does leave some pretty awesome clues. And you've got people, economists like Fred Harrison and Phil Anderson and Akhil Patel and Ray Dalio, that have actually dove into hundreds of years of historic data and created this understanding which they call the 18.6 year real estate cycle. So what Ben and I did is we looked back at previous cycles around this time of the real estate cycle to see what happens. And we also looked back at times when interest rates were coming up quite heavily, quite sharp, and how that impacted certain markets around Australia as well. And I was pretty pleasantly surprised after doing that research.
Man, I feel completely different, to be honest with you. And it's like, I remember when we were up in Cairns and we came back and COVID had completely hit. We're sort of in this little Cairns bubble for a week.
It's such a trip.
And then we get back and it's come back to 180 calls from clients, just everybody sort of freaking out. And what we did is what we always do, which is go back into the history. So first we looked at 46 years worth of data from Homely, and then I went and looked back at over 250 years worth of Fred Harrison's data around mid-cycle slowdowns in the UK. And I found that in the previous 13 mid-cycle slowdowns before that, which we've just come through, stock markets drop on average, I think we found out, between about 15 and 45%, which is what happened. And property prices around the world during that time for 200 years had dropped between 0 and about 10%, which also ended up happening. And as soon as we got that, and then we went straight to Ray Dalio, who in March was kind of like the world's about to fall off a cliff. And by April had said, I completely overestimated, I'm sorry. I didn't realise the government would step in so hard. And then, we started to realise that through history, through data, and through absolute thought leaders in the space, we were able to figure out what might happen based on history. And so as we look to the next 5 years, that's exactly what we're doing. It isn't mine and Simon's thoughts, because I have no freaking idea what's going to happen. But historically speaking, there's some cool stuff.
There is some cool stuff. And the probably most comparable time to where we are right now is that time maybe 20 years ago, where it was sort of 2002, coming into the second half of the real estate cycle after the dot-com bust. Dot-com bust?
.com.
After the dot-com bust, that was where we saw a huge correction in the stock market. People were really fearful around the world. Then the World Trade Centers came down as well, which was super intense, and that was the beginning of the war on terror. And, during that time, property prices remained relatively resilient, and then we came into, quite a good period of time in Australia. Now, during that period from 2002 through to 2008, Simon Priestley has done some research, and the Brisbane property market over that period of time increased 127%, which is huge. Over that 6-year period, there was also about 22 interest rate rises throughout that period of time as well. Now, it was 6 out of 8 capital cities doubled in value over that period of time. It was only Sydney and Melbourne that didn't back in that run up. And what was it? It was like 98 towns around Australia doubled in value as well over that 8-year run. Now, I'm not saying that those things are going to happen again, but Simon Priestley and Phil Anderson are coming out with some of their predictions between 2022 and the top of the cycle, which they're calling for the end of 2026.
It's really interesting, man, because one of the big pieces of fear in the media at the moment is the effect of interest rates. Now, we've got to remember that just 3 or 4 years ago, interest rates were 3% higher than they are now. And so there's some really, really good information if you want to go deep into this. If you look at the news and insights on Propertyology's website, just at the top of their page there's one article which is property predictions for 2022. There's another one talking about property prices potentially doubling over the next 5 or 6 years. And they're grabby headlines, but once you break into it, they look at interest rates, household savings, household debts. They look at history over about 50 years. They look at vacancy rates, inflation, and all of those good things that really help you start to unpack the fact from fiction, which is the hardest thing to do at the moment, especially in an election year where that also creates its own little bit of fear. Now, if we look at that 2022 to 2028 period that you were discussing a moment ago, Brisbane did exceptionally well, as you mentioned.
Yeah, 2002 to 2008.
I think Adelaide and Perth did even better than Brisbane during the same period of time.
Yeah.
What was interesting, though, is because at that time, Sydney and Melbourne had gone through an incredible run in the first half of the cycle like they have this time round. And off the back of that, I think Sydney did under 30% and Melbourne did under 70% in that 6-year period. And when I went and looked at, more than that cycle, the 2 previous cycles before that, I found a semi-similar pattern in the sense that those markets had underperformed relative to the likes of your Perths, your Adelaides and your Brisbanes. And you don't have to be a rocket scientist to figure out why. It is because Sydney and Melbourne and New York and London and Singapore, Hong Kong do very, very well in the first half of the cycle because they're the most diversified global economies. They recover faster. Because their economic environment recovers faster after a GFC, they rise quicker, there's more people and the confidence comes back sooner. Then it gets to a point where Sydney and Melbourne are at right now where it's just
I can't justify
really
it.
expensive versus the local income.
Yeah, big time. It's very difficult to justify spending the amount of money that you need to get into those markets. And, I'm not the only one thinking that. A lot of people that live in Sydney and Melbourne are thinking the exact same thing. We've got lots of friends that are in a position trying to buy their first homes down in Sydney and, they're just, rubbing their hands like, what am I meant to do here?
100%, bro. And so those people start looking at other options. Other options could be investing their money in other asset classes, other capital cities, or like we've seen, just this massive merge. Now, they're calling like COVID the big instigator for that. But if you look actually back at history, the 3 last times we went through this, people just get to a point where they're like, the dream is not working for certain families in those cities. And so they bail north, they bail south. You've seen them go to Hobart, Perth, you see them come to Brizzy or southeast Queensland. And all of a sudden, what happens is the vacancy rates go down, there's no stock. And then when interest rates are also low, I know people that are paying $400 a week to live, paying off the interest on their home loan, or they'd be paying $700 a week to rent it right now. And so people are making that decision, well, I can't find a rental, / it's way more expensive to rent, I'm gonna buy.
Yeah.
Now, the biggest myth at the moment I think that needs to be unbunked is the relationship between a small interest rate rise and property market declines. While I do think there is coming a peel back right now looking at what all of the big banks are saying, and sometimes this is just a self-fulfilling prophecy, like, the media gets on that bandwagon. It would be nice to see Sydney and Melbourne, peel back by 5 to 10% next year and just stabilise a bit. And then if interest rates, jump the tiniest bit and then wages jump quite a bit between now and the end of next year, they will feel more affordable, and that will bring confidence back into the market from about 2024 onwards.
Yeah, there's a lot of different factors that the RBA, that the Australian government can use to stimulate the economy, slow down markets, and make sure that things are just moving in a nice, smooth, consistent fashion. Now, 2021 was a wild year, and there's no way that the market could have done what it did last year again. It's just, you can't have those types of years, year on year. And looking back in history, it's very rare to see, big years like we did in 2021. So there was going to be naturally a bit of a pullback, a lot of fatigue in the market, people a little bit fed up. You got a lot of people from Sydney that are looking at that. Now, I know when a lot of these people in Sydney and Melbourne, on top of what you were talking about, they've seen a lot of capital growth in their assets. They've got that equity sitting there, and maybe these people are thinking about buying investment properties, but when they're looking at the market, they analyse Sydney and they just say, I can't justify or afford to buy an investment property in Sydney, but hey, looking up to Brisbane where I can get a lot more bang for my buck, or over in Perth or Adelaide, wherever it might be, they start to allocate their investment funds to those different markets, which also stimulates those secondary satellite cities in the second half of the cycle as well.
So a few of the things that we're sort of reading about coming, the banks are sort of suggesting this year maybe somewhere between a 5 and a 12% return, a pullback next year, and then property prices should be off to the races, as Phil says, from 2024 to 2026. Phil Anderson's expecting house prices in Australia to go up by between 50 and 70% over the next 6 years. Simon Priestley is expecting even more than that. He's expecting around about 60 to 100% growth in certain capital cities and markets around Australia over the next 5 or 6 years as well.
Yeah, so it's not going to be concentrated in the one market, right? It's not going to just be Brisbane's going to be the top performer, or Perth. It'll be a lot of these different regions, a lot of different regional towns that might experience some solid capital growth. But Simon Priestley believes that some properties in Brisbane could double in value over the next 6 years, which is huge. I don't know if he actually had as bullish predictions anywhere else outside of Brisbane.
It's interesting. So as we move through this next period of time, generally the second half is a little bit more bullish / a little bit more bearish. People start to go very excited, very fearful, very excited, very fearful. It's not going to be this beautiful trajectory where things just keep going up indefinitely. And then, our expectation personally is that, I just bought a property a weekend ago, which is sick.
Yeah, man.
I feel very, very comfortable about the current market. I feel comfortable looking back at, 30, 40, 50 years of history on what's coming next personally, but I'm also starting to think about the next correction.
Yeah.
In terms of stacking a little bit of extra savings away, reducing my LVRs on my properties, increasing the rents, because rents are expected to go through the roof this year, at least up 100, if not $200 a week in Australia. Commonwealth Bank's expecting that by the middle to end of 2024, with inflation and wages increasing so much, that all property markets in Australia will feel affordable again. The big thing that's coming, guys, and the difference between right now and a major market where things are about to crash is people have money in the bank. The debt to income ratios in Australia are low. People have money in stocks. They have money in crypto. They're not maxed out on credit cards.
Interest rates are still extremely low. Even though they're going to come up, they're still super low right now.
Super low, and money's actually extremely hard to get still.
Yeah.
And that's an important one too. So as we get closer to 2026, more and more speculation in all markets around the world and Australia will come in. Certain people will be over leveraged, and when we do hit that point where a few big banks or a few big developers or a country goes bankrupt because they're in too much debt, then we'll see the knock-on effect and move through another cycle, which historically should see the stock market drop 35 to 50%, should see certain property markets around the world drop between 10% and 35%. So it's important to not get caught out as we move through the next 5 years. You don't want to be over leveraged by 2026. You don't want to be rushing in and hitting markets that have already gone up 10% a year for the last 10 years. If you are investing as we get further into this, you want to be picking the eyeballs out of the suburbs and the markets in Australia that have yet to perform, the likes of your Brisbanes and certain suburbs within that, your Adelaides, your Perths, your Darwins, like places that have some potential still versus suburbs in Sydney or Melbourne that have already gone up 100, 150% in the last 10 years.
Yeah, you know, when you look at what Phil Anderson, Fred Arison, Catherine Cashmore, Ackle Paddle are all saying, they truly believe that we are coming into the largest real estate boom in history. Now, only time will tell there. There is a lot of potential out there, hence why you've just picked yourself up another property. But I think, as always, it's important to just employ that longer term investment strategy. It is very difficult to predict what's going to happen short term, but over the longer term, we've seen the common trends with, you know, Sydney, Melbourne and Brisbane all increasing by over 9% over the last 46 years, according to Homely. You know, that you got to be in it for the longer term, because we can't control the market. We can't control what happens year in, year out. But if you're in that for the longer term, 15 plus years, your return should be quite positive, and you can put yourself in a great position and hopefully work towards generating a nice passive income and achieving financial freedom in the long term. You know, there's always going to be different sentiment, different narratives out there that are going to make us scared or excited. You know, you've just got to really look at your financial position. You've got to look at your lifestyle and your goals and create a plan that's going to enable you individually to live your best life.
You know, one of the things that I've learned from being in this for longer is every time the market spooks, and once a year there's one thing that spooks it. It could be fires, floods, COVID, stock market, crypto correction. It could be an election, could be a war, unfortunately. And when the market spooks, people sit out. That's the natural reaction. I don't want to run away. I don't want to run into it. I just want to sit on the fence and I'll wait and see what happens. Now, every time this happens, we get this buying opportunity where instead of being able to buy one out of every 3 places, we're buying almost one out of every 1 or one out of every 2. Instead of competing with 50 people on a weekend for a property, we're competing with 5. And people get these absolute deals and steals. Now, the best environments I've seen is when APRA really stepped in heavy and made lending harder and spooked. Then there was an election, then APRA stepped in again, then there were the fires, and
then there was COVID.
And, you know, COVID, if I look back as like a mini storm, was probably one of the best buying opportunities in 50 years in Australia. As we move through the next 2 years, because the media cycle has been like already fear-based, it's going to continue on that journey with property. And right now, they are scaring the absolute shit out of most people. And off the back of that, sentiment is dropping, which is, you know, unfortunately a great thing as a buyer. It's, you know, a scary thing as an investor. But that is representing, I think, the next year and a half, one of probably the last incredible buying opportunity in the next 6 years if you're a dip buyer. And then all of the confidence is going to come back, similar to what we saw in 2021 where things went nuts. Maybe we won't see the same growth, but we'll see the same excitement. And that's cool. Like, I love buying in those markets too. But if you're a dip buyer, the next 6 to 18 months is going to be phenomenal. And I do think it's going to take a little bit of time for that confidence to wash back through. And we're already seeing, man, like, it's not that places are going for any less. It's just that there's less competition, so you've got more leverage.
Yeah, there's a bit more of an equilibrium in the market with supply and demand. And that helps us buy. We can take our time analysing the opportunity. We can build a bit more rapport with the real estate agents and, you know, get more feedback, which helps us get that property at the best possible price, rather than 50 people at the open home, 15 offers on the exact same property, sells $150,000 above market value. You know, that's wild and very challenging to buy in those opportunities. But right now, we're starting to see it and starting to get back a little bit more negotiating power and starting to see slightly better deals. But as you said, it's not like the price has come back at all. You know, that growth has been realised, and in most areas that we're buying in, we're still seeing a 1 to 2% increase month on month in Brisbane at the moment. So it is still moving forward. It's just a lot more of a balance between supply and demand, which makes our lives a hell of a lot easier and your lives a hell of a lot easier, because it's not as stressful when you're operating in a market like it is right now. But this won't last forever, because a lot of people will find the confidence at some point over the next 1 to 2 years and they'll flood back into the market again.
Yeah, I think that's really important. Like one thing I really, really want to drive home now is there's almost two Australian property markets. There's a Sydney, Melbourne market,
Yep.
and then there's the rest of Australia, which has underperformed in relative terms in comparison. Now, places like Geelong and the Goldie have performed, and they're in the Sydney and Melbourne bucket, but there's many other places that are so undervalued that have gone up by between 1, 2, 3% a year for the last 10 to 12 years that historically have done much better than that. So as we move forward and through this time, I really want people to start focusing on the longer term and realising when 7 of Australia's leading analysts, including 3 banks, come out front page of Financial Review last year and suggest that certain pockets of Brisbane, for example, should or could double between now and the Olympic Games, and that it's going to create 130,000 new jobs, and we're going to have to move that many people up here to fill them, and that the vacancy rates in parts of Australia are sitting below 1% outside of Sydney and Melbourne right now. Like, there's this underlying surge of potential because they're yet to perform, the vacancy rates are low, interest rates are low, savings are high, and people are flocking to these areas. And that is going to result in something really special, whether it happens in the next year or the next 5 or the next 15. It's important to be in it so that over the longer term you can capitalise and realise that potential.
Yeah, and I think what's really important is just getting a bit more context around the property market. You know, there's not one major thing that impacts a market. You know, just interest rate rises isn't going to be the only thing that impacts a market. There's a lot of different things, and you know, it's important to be aware of those things and study them and learn them so that you've got that knowledge, so that you've got that confidence to execute your goals and execute your strategy to get to where you want to be. Because unfortunately, you know, it's never going to feel confident. Well, it hasn't for me yet, feel confident buying any properties, but you've got to find that confidence, because doing nothing will change nothing, but doing something can change everything. I'm really excited for the long-term future. I'm really excited for the medium-term future as well, and to see how all these things unfold. I'm really intrigued to see whether Phil and Fred and Akhil and Ray are all right. And if they are, it's going to give me a hell of a lot of confidence and awareness as to how the economy moves around the world and how to capitalise on certain opportunities during that cycle as well. But I don't know what's going to happen. I'm just trying to listen to what everybody is saying and taking it all with a grain of salt and just meticulously executing my plan and helping other people understand the market and execute their plans as well, which is always fun and exciting regardless of what's going on.
I love that so much, bro. Thanks so much, guys, for watching this short one or listening to this short one today. We wish you all the best and all the safety as we move through the next 4 or 5 years.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.